Good evening. It is time for today's tax talk. I'm your host. I'm attorney Stephen Leahy. Thanks so much for joining us. It is Thursday, December 29th, the year of our Lord 2022, coming to an end. 2022. We did the list on Crypto Tuesday, top 5 industries. I'm not going to do that. We've been talking about the 1099K and the Venmo requirement and what all that means. But I had to stop and think and how much that many people don't even know what a 1099K is. And so the question comes up, what is a 1099K? That's what we're going to talk about today. Won't you join us? Now, I do a lot of continuing education for attorneys and accountants and things. And one of the things I did one for it's a Lorman educational group, 1099Cs. I have one coming up in February about 1099 NEC, the non-employee compensation, which is and how it relates to attorneys. But so I'm knee deep or neck deep into this information returns, and we talked a little bit about it yesterday about what an information return is, and that's what a 1099K is. It's just another variation of that information return, and the IRS's mission to find out as much about you as they can, about where any money comes from. Any money changes hands, they want to know about it, right? And I have to say, sometimes I have to wonder, if I'm a guy, my family, and they want to watch some kids and make a couple of dollars on the side, the IRS wants me to report that, and actually I should report that money, right? But the government's going to spend time and efforts coming after you for the $1,000 or $2,000, or maybe it's $10,000, whatever it is, and the taxes that are due on there. But they can send hundreds of billions of dollars to Ukraine, or waste, $1 billion on. I mean, let's face it. There's 1,000 things in that omnibus bill that you can point to and say this shouldn't be spent. And how do we pay for it? Well, we go after everybody for every dime that they get. That's what the 1099 is for. That's what all information reports are for, right? So I thought, well, let's talk about what an information report is. So a lot of people don't know what that is, and they have no. We hear about these 1099s. We know, most of us know about a W-2, right? What is that? That's just another way for the IRS to keep tabs on what we make and take and get their taxes, get their end, right? And so that's what a 1099 is. America was always built around the business owner, right? And we always, actually, a vast majority of our jobs was always provided by business owners, not big corporations, but smaller companies, people who started their own thing. The government doesn't like when you start your own thing because they're afraid they're not getting their end. And then they'll tell you that that's not fair. It's not fair that they wring dry everybody and they can't wring you dry. They don't like that. And actually, they wring everybody dry because most people pay their taxes as they're supposed to. And people will yell, well, business owners take clients out to dinner and they get to take that off their taxes. I think that's in the end. Anyway, it's good for business. That's why they allow it, right? They just increase that deduction because they cut it in half. For many years, you could always take off that deduction from your taxes as a business expense, but then they cut it in half and say, oh, no, you're going to get half of it. But after COVID and all these problems with the businesses, restaurants, they wanted to encourage people to go back to restaurants. So they provided the tax deduction so more people can go, so they can deduct it. more people would go, was the thought. So let's talk about what a information return is. Excuse me. I ate some pistachios before I got on. Shouldn't do that. It always makes me cough. But I thought, where do you begin with this? Well, you begin at the beginning, and you begin with the IRS. And so I went to the IRS, and I on irs.gov, and you look. And here's a guide for information returns. Any person engaged in a trade or business, including a corporation, partnership, excuse me, should have brought some water, partnership, individual, estate, and trust, who makes reportable transactions during the calendar year, must file information returns to report those transactions to the IRS. Persons required to file information returns to the IRS must also furnish statements to the other party to the transaction, such as recipients of income. Filers who have 250 or more of these returns must file them electronically. That's a fairly new rule. The requirement to file information returns is mandated by the Internal Revenue Code and associated regulations. Now, the IRS is really starting to focus on computer analysts, right? So they're analyzing everything electronically, and that's why they're requiring all of these documents to be filed electronically, so they can be analyzed electronically. They don't want this. Remember yesterday I talked about the 30 million returns that were disposed of without processing. Well, all those were paper returns, right? Because the IRS is not set up any longer to do paper. They don't want to do paper, and that's another reason why they've come up with all of these different 1099 forms recently in the last years. So the most common payments reported on each form are shown below. However, it is not a complete list of all the reportable payments, and the absence of a payment from the list does not mean that the payment is not reportable. You should think that the IRS would give you a list, an exhaustive list, but no. For information on specific types of payments, use the links to the table below. So here's these links in 1098s for mortgage interest, 1099As for abandonment of property, 1099Bs, 1099Cs, we mentioned, 1099 DIVs, dividends. They also have the digital asset one that they talked about, but they put that on hold. The 1099 INTs for interest. Here's the 1099K, which is what we're talking about today. A payment settlement entity is a domestic or foreign entity that is a merchant acquiring entity, a bank or other organization that has a contractual obligation to make a payment to participating payees in settlement of payment card transactions. Easy for you to say. Here's another one. Third-party network transaction. That was payment cards. So if you're a company and you're getting money from credit cards, right? I charge my customers, and I go through a clearing, a company that clears it. They send me a 1099K and tell me how much money went through that process. Does that mean all that money that went through there is taxable? No, it's a gross amount of money. So some of it might not be taxable. So here's the third-party transactions. This is the Venmo and things like that. A payment settlement entity, a PSE, is a domestic or foreign entity that is a third-party settlement organization, the central organization that has the contractual obligation to make payments to participating payees or third-party network transactions. So that's a 1099K. We talked about the 1099 NEC. So anyway, I'm just going to skip through these. You see all of them. The miscellaneous, 1099 miscellaneous. There's a lot of difference. 1099S, reporting obligations for student loans, tuition payments, health insurance reporting, all of this. Okay, so all of this are what they call information returns. And of one of them is the 1099K. And so what is the 1099? Understanding your 1099K. So here it is. Recently I've been attaching a written blog post to the videos that I do. So in the comment section is 300 or 400 words where I talk about it. I don't want to read my blog post on the show, but it's related. So here it is. Form 1099K, payment card or third-party network transaction, is an IRS information return used to report certain payment transactions here's the purpose now, to improve voluntary tax compliance. Okay, but it's more than voluntary tax compliance. The IRS has become very good at electronic matching. Right, so all of these, remember, you get a 1099K or any other of these 1099s, miscellaneous, NEC, whatever the 1099 is. It's got your Social Security number on it and the company that paid it, right? So I get one from the 1099K. They send it to the IRS. It's got my Social Security number on it. Now they can match my Social Security, my tax return, to the Social Security number of that 1099K and see if I reported it. Okay, so it's about voluntary compliance because they're saying, hey, if it's being reported, you're going to report it voluntarily. But it's also not really about voluntary because they want to be able to do it whether you report it or not. They want to know about it and they want to come after you. And this is the CP 2000 that we've talked about on this show several times already. So that's why that's important. Okay, so from all credit cards, transactions, and settlement of third-party network transactions above the minimum reporting thresholds as follows. And this is the way it was until the Americans with the American Rescue Plan in 2021 was passed in March. Gross payments that exceed $20,000 and there's more than 200 such transactions. Well, if you're doing 200 transactions and it's more than 20,000, pretty good bet that that's your business, right? And probably that's income. Okay. And then now it says for calendar year after 2021, and this is the big change that we've been talking about since last March, since they passed this law. Actually, when they passed the law early on, nobody really knew about it. So it wasn't until later that it's because that's the old, the new way of passing laws is pass the law to find out what's in it. The recent omnibus bill was 4,000 pages long that they distributed a day or two before they voted on it. So nobody knows what's in it. All of it. Nobody knows. And so we'll learn as it comes out and as these rules start coming out and people say, that's just crazy. And that's what happened here, right? That this came out and they said, now for these returns, not $20,000, but $600 and not 200 transactions, but any transactions, any number of transactions. So if you have one transaction, it's $600 or more, it's going to be reported. We're going to get a 1099K. And that's what people have now been like, wait, what's going on? This is crazy stuff. Okay. And so that's why, again, in recent weeks, we've reported on the show, right? That there was a Democratic representative from Illinois who was saying, hey, we should change this to at least $5,000. Manchin and another senator came out and said, no, it should be $10,000. But none of that passed. And so just right before Christmas on the 23rd here it is, note, here it is. On December 23rd, 2022, the IRS announced that the calendar year 2022 will be treated as a transition year for the reduced reporting threshold of $600. For calendar year 2022, third-party settlement organizations who issue Forms 1099K are only required to report transactions where gross payments exceed $20,000 and there are more than 200 transactions. Even though the Form 1099K reduced reporting requirement for third-party settlement organizations was delayed, some individuals may still receive a Form 1099K who have not received one in the past. Some individuals may receive a Form 1099K for the sale of personal items on its situation or in situations where they received the Form 1099K in error. IRS is updating guidance to direct taxpayers to report these scenarios on Form 1040. This is what I've been upset. This is what it's not, and then so I'm gonna go. Here's this. Here, this is I'm just gonna get rid of this. Disagree to all of this. This is disagree to all of it. This is a article that I came across today. IRS delayed Form 1099-K. What are the myths about payment application transactions? Everything you need to know about Venmo and PayPal payments. Well, here's a secret. This is not everything you need to know in this article. The reporting thresholds for third-party settlement groups that were supposed to go into effect for the upcoming tax season have been postponed, according to the IRS. So they just, December 23rd, they were due by January 31st. So just a little more than 30 days reprieve. Okay, so many of these companies have already started working on them because you only have 30 days to get them out, or 31 days. These third-party organizations, I'm just going to call them third parties, won't be required to disclose transactions for the tax year 2022 on the Form 1099-K to the IRS or the payee for the lower $600 threshold amount implemented as part of the American Rescue Plan in 2021. As a result of this delay, Venmo, PayPal, and Cash App are examples of well-known third-party settlement organizations. According to the IRS, this means that the current 1099-K reporting threshold of $20,000 in repayments for more than 200 transactions will continue to be in place for the tax year. Payment apps like Venmo, Cash App, and Zelle are the subject of numerous myths and false information, particularly about IRS and what you will be required to pay taxes on. And this is where I have to I get crazy about, because the problem is not about paying tax. I mean, it is about paying taxes, but that's not where the big problem comes in. And they keep saying, well, that doesn't change the tax implications. That's true. It doesn't, because as the 16th Amendment says, all income from whatever source derived is taxable. But what it does is put the onus on the taxpayer. And now there's going to be a lot more questions and confusions and trouble for the taxpayer, because they're going to have to prove. I think there's something in here. I think maybe we'll go back if we have a couple of minutes here. Will I have to pay taxes on money my buddy sends me via Venmo, Cash App, Zelle, or another payment plan app? First, I'm going to tell you that Zelle's not a third-party organization. We've already said that on this show. It's been established. I'm fairly certain. Now, the IRS might go back and change that rule, but as it stands today, Zelle is not a third-party organization, so they're not going to get a 1099-K from any transactions from Zelle. So that they're wrong about that. No, you just need to pay taxes on the money you earn from purchasing products and services. Your income may be taxed if you use a payment app to collect payments for the goods and services you sell. That's all true, but they can also send you a 1099-K for things you didn't sell, not for goods and services. But you'll have to, and you won't have to pay tax if you can explain it, but you'll have to explain it. Will I have to pay taxes if my friend pays me back for dinner using a payment app if I received a financial gift? No, utilizing a payment app to split the meal tab with a friend won't require you to pay taxes on the money. You won't need to file a 1099-K if you receive money as a gift via the payment app, unless you get the 1099-K, and then you'll have to explain it. My earnings as sole proprietor will be reported via payment apps. If you had 200 transactions and $220,000 in proceeds on processed payments throughout the year, payment app providers will be obligated to report and issue Form 1099-K on payments made for any items or services you have sold. Well, they've been doing that for some years now. Do I need to declare some income I received through a third-party platform if I didn't obtain it for This is untrue. Well, I don't understand this one. Do I need to declare income received through a third-party platform if I didn't obtain a Form 1099-K? This is untrue. You must continue to record your self-employment revenue from your internet selling business as required by law. As Schedules SE, reporting your self-employment taxes must be filed along with your Schedule C and personal taxes if you have a net self-employment income of $400 or higher. So I don't know what they mean by that, but yeah, it is true that yes, you still have to pay taxes. Venmo, Cash App, Zelle, and other payment app providers will immediately implement the American Rescue Plan reporting adjustment. Well, they did. Not immediately, they did it according to law. But now they've given a reprieve, again, just December 23rd. On December 23rd, the IRS announced a delay in reporting criteria for third-party settlement firms like Venmo and PayPal, set to take effect the following tax year, 2023, for 2022. The move under the American Rescue Plan was supposed to commence with tax year 2022 taxes. Third-party settlement organizations won't be required to report tax year 2022 transactions on a Form 1099-K to the IRS or the payee for the lower 600 threshold amount implemented as part of the American Rescue Plan of 2021 as a result of this delay. I made nearly $600 from one eBay sale. I won't get a 1099-K, and I don't need to file taxes on that, on the income. No, you still have to file. If it's income, you still have to file taxes on it. Due to the reporting delay announced by the IRS today, you shouldn't receive a 1099-K, but if you sell personal items for a profit, you should deduct the profit from your taxes. You should deduct the profit. I don't know what that means. I think that's also. So here somebody got it all wrong. I think there's some examples here. Let's see. Yeah, here's one. If you receive a Form 1099-K for a personal item sold, this is the IRS now, report the information on 1040, Schedule 1, additional income and adjustments to income with offsetting transactions. For example, if you receive a 1099-K for selling a couch online for $700, you will report Part 1, Line 8Z, other income, Form 1099-K, personal item sold at a loss, $700. Then I have to put it on Part 2, Line 24Z, other adjustments, Form 1099-K, personal income sold at a loss, $700. The net effect of these two adjustments on gross income would be zero. But I have to put that in the schedules. So it's up to me to make sure my taxes are done right. And I put this on the schedules. That's where the problem arises in my mind. So anyway, that's there's links down below to the 1099-K. So go here. You'll see a bunch of there's a couple of the what should I do with this information? So anyway, there's information there. I don't want to go all that much into it there. I mean, we've already been talking about 22 minutes. So anyway, I wanted to explain what is a 1099-K, what's it used for. And I thought this was the perfect opportunity to do that. I hope I didn't confuse you more, because sometimes when you read IRS instructions, you get more confused than when you went in. I know, I get that. So anyway, that's where it is. And thanks so much for watching. Remember to we're going to ask you to like and subscribe. I know I keep doing it at the end. I should do it at the beginning, but I'm told I will do that. And remember, if you have IRS problems, if you owe the IRS some money, if you have unfiled tax returns and you don't know what to do, you don't know where to turn, first thing you should do, get a copy of my book, Deal with Your IRS Problem Today. Go to freeirsbook.com. That's freeirsbook.com. Get your free copy. And I will pay for the printing. I will ask you to pay for the shipping and handling, but I will pay for the printing. So go to freeirsbook.com. That's freeirsbook.com. Get your free copy. So thanks so much for joining us. I don't know if I'll be here tomorrow. Probably not, but it's going to be New Year, and then I'm going to be gone. We're going to go to Tennessee. I have some business there in Tennessee, and I'm going to be there. And so probably not going to do some shows for a couple of days. So thanks so much. Happy New Year to all of you. I hope you had a great Christmas, and it's a Happy New Year. And thanks so much for being part of the show. And we will see you next year. Always like that one, right? God bless you. Out.